Hello and welcome to Crypto Craze, your go-to source for the latest and greatest in cryptocurrency news and education. Buckle up for an intense ride as we take you on a journey through a content-packed video that is not to be missed. So please hit the like button, subscribe to the channel, and turn on post notifications. It seems like former President Donald Trump is back in the news, and this time it's about his NFT collection. Now I know what you're thinking. NFTs? Trump? It's like mixing oil and water, or in this case, mixing crypto and politics. But believe it or not, Trump's NFT collection is having a blast, and it's making headlines for all the right reasons. Really quick, guys, it's worth noting that I am not a certified financial or investment advisor by profession. Please understand that this video should not be taken as financial or investment advice, though this likely comes as no surprise to you. Let's backtrack a bit. Recently, the former president made history by becoming the first incumbent U.S. president to be indicted on criminal charges. And just like that, the interest in his NFT collection skyrocketed. The sales of Trump digital trading cards increased by a whopping 460% in a 24 hours time period, totaling $185,785. That's a lot of moolah for a collection that was launched in December to widespread derision. But wait, there's more. According to NFT Price Floor, a platform that keeps tabs on the market for these tokens, the current volume of sales of Trump's NFT collection is 99 ETH, or almost 180 individual transactions. And the floor price, or the price of the cheapest listed NFT in the collection, has increased by 25% to its current level of $1,023. That's no chump change, folks. Now let's talk about the collection itself. It's a 45,000-piece set that features a stiff-faced Trump dressed as Superman, a wrestler, a soldier, a football player, and many other characters. About 13,963 people have purchased NFT cards so far, representing a 31% increase since the launch in December. Back in December 2022, Trump unveiled the first deck of digital cards through his social platform, and within hours of their release, the NFTs had completely sold out. As the new year rolled in and Trump's legal battles and potential 2024 presidential candidacy gained more traction, so did his NFT collection. And let me tell you, the initial reaction from the cryptocurrency community was one of widespread disbelief. But as the sales surged, the potential of the NFT initiative became harder to discount. It even momentarily led sales records, proving that you can't underestimate the power of a controversial political figure and some digital trading cards. Now, I know that some of you crypto enthusiasts might be rolling your eyes at the thought of Trump's NFT collection, but hey, you can't deny the numbers, and you can't deny the fact that it's making headlines. So, whether you're a fan of the former president or not, you have to admit that this is one interesting development in the world of crypto. Who knows? Maybe we'll see other political figures jumping on the NFT bandwagon in the future. Personally, I can't wait to see Bernie Sanders as a Pokemon or AOC as a Sailor Moon character. The possibilities are endless. For our next story of the day, let's dive into the exciting world of crypto assets and explore the latest buzz in the industry. The total market capitalization of crypto assets has been on the rise, reaching over $3 billion in November 2021, and the industry is only getting started. So what's the next big thing in the world of cryptocurrency? Enter the real-world asset, RWA sector, relatively new within the cryptocurrency industry that is poised to take the world by storm. According to the decentralized finance expert under the pseudonym Edgy, the RWA sector could reach a market cap of $16 trillion by 2030, propelling cryptocurrencies into the mainstream. So, what is this sector, and why is it such a big deal? The RWA sector uses blockchain technology to tokenize real-world assets, such as real estate, commodities, and other physical assets. Tokenization means converting ownership of an asset into digital tokens, which can be traded on a blockchain-based platform, making the asset more accessible to a wider range of investors. Tokenization offers several advantages over traditional methods of asset ownership and investment. By tokenizing assets, The RWA sector allows for direct ownership and trading of assets, cutting out intermediaries such as brokers and other rent seekers. This leads to cost savings and increased accessibility for smaller investments, as investors can buy small portions of an asset if they cannot afford to buy the entire thing. But the benefits don't stop there. Tokenized assets can also be used as collateral for loans, which can help businesses that may have difficulty accessing traditional forms of financing. This is especially beneficial for businesses in emerging markets, where access to capital may be limited. The potential for growth within the RWA sector is enormous. Goldman Sachs has already launched its own blockchain-based platform, GSDApp, to tokenize traditional assets, such as loans and bonds. Technology company Siemens issued a $60 million bond tokenized on the Polygon network, demonstrating the potential of blockchain-based platforms for the crypto and real-world asset sectors. Even Amazon is rumored to be launching its own NFT platform tied to real-world assets. Jeremy Allaire, the CEO of Circle, believes that tokenized property and contracts will likely become commonplace within the next 5 to 10 years. This sentiment is echoed by the success of Homebase, a company specializing in tokenized real estate, which sold out its first tokenized rental property on the Solana blockchain in under 2 weeks. The RWA sector has the potential to impact various aspects of the global economy, from increased accessibility and liquidity of traditionally illiquid assets to lower transaction costs and greater efficiency in buying and selling assets. As the sector continues to evolve, we can expect more benefits to emerge, driving the growth and adoption of the crypto sector. For our last story of the day, Bittrex, one of the most popular cryptocurrency trading platforms, has announced that it will be closing its doors in the United States starting in April. Yep, you read that right. Bittrex is saying goodbye to the good old US of A, citing regulatory uncertainty as the main reason for this decision. It's ironic that this announcement comes on the heels of Bittrex's 9th anniversary celebration. But the good news is that Bittrex has assured its US customers that their funds are safe and can be withdrawn immediately. So, don't panic. You have until April 30th to move your assets out of the platform. But why is Bittrex leaving the US exchange space? According to Richie Lai, the co-founder and CEO of Bittrex, it's simply not economically viable to continue operations in the US under the current regulatory system. He has a point. The regulatory requirements in the US are unclear and enforced without appropriate discussion or input, creating an uneven competitive landscape. It's like trying to play a game where the rules keep changing every other minute. It's frustrating, to say the least. The US has been a rather crypto-hostile environment recently, with regulatory bodies cracking down on several crypto exchanges and businesses. The Securities and Exchange Commission, SEC, has been leading the charge, suing prominent crypto entities like Terraform, Paxos, Kraken, and Gemini, to name a few. The SEC's main argument is that most cryptocurrencies are securities and should be regulated as such. However, the US still lacks a federal crypto regulatory framework, so there's no law that classifies cryptocurrencies as securities yet. This regulatory crackdown is starting to scare key players in the crypto space. And who can blame them? With no clear regulations in sight, it's hard to know what the future holds for the crypto industry in the US. Bittrex may just be the first of many to voluntarily halt operations in the US to escape this brewing storm. It's important to note that Bittrex isn't closing shop entirely. They're just shifting their focus to their global branch, Bittrex Global. So, if you're not based in the US, you're in luck. You can still access Bittrex's services via Bittrex Global. Make sure to comment down below what video you would like to see next, and hit the like button if you learned something new or found the information useful. Also, please consider subscribing if you like this type of content. That's all for now. Until next time, guys.